All right, Cleveland investors. Sorry, it's been a few weeks, but had a few things we wanted to clear up. We've been working on quite a few different moving parts. Michael, thanks for joining as always. We can start with some good news. Collections, delinquency, and evictions are going very well. I'm going to share my screen so we can show our investors what's going on. But you and I were just talking with property managers about we've never seen delinquency this low. Let me pull that up really quick. Let's see. Can you see my screen okay, Michael?
Yeah.
Just making sure. So, Michael, you asked the question, it's hard to really gauge the importance of 0 to 30 day delinquency when we're halfway through the month because there's a lot of tenants that'll pay, the last part of the month. So this isn't always a number that's very good indicator. What we do like to look at is 31 to 60 days and 61 to 90 days. And so these numbers overall are about a third of where they were a year ago. So we've made huge progress there, and that's exciting. Any thoughts on your perspective of delinquency and collections there?
Yeah. So, you and I have been sharing the gospel that really you can have high occupancy and you can have all sorts of things, but unless you have really get that delinquency down to negligible levels, and you have retention, very high levels, occupancies, as we've seen in some of our properties, you can have skips all the time. You can have evictions. So
Yeah.
occupancy actually doesn't mean a whole lot if you don't have your delinquency and your retention in check. So this is what we've been really working on as hard as possible, not us, but a theme, for the last 9 months. And it's starting to really bear fruit.
Yeah. So again, we had occupancy issues, but as you just stated, it was kind of that wasn't the only issue. We had occupancy issues, and then we weren't collecting any of the rent. So just for reference, so our investors can really understand where we were, our delinquency was over 150,000 at just a F4. We were, 2 to 3 times that higher on each property. And so when you've got tenants that won't pay and evictions not happening. Right now, we've got 14 evictions pending. We just had a few more. These are people that could pay that are working that just choose not to. They're working the system. I mean, that really was just such a bad combination for these properties. And so line 75, you got the max amount that we think we'll collect for the month of April right here. Um, of course, the numbers have been a little bit lower than that. It's been an up and down thing that we're working hard on getting back up. Um, but yeah, I think the big story is evictions are happening finally. That delinquency is going down and occupancy is not where we want it to be. We'd rather it was up above 95%. F4 is still hovering around 90, F1 around 90. And the big leasing season is coming up. And so we're pushing really hard right now to get those numbers up. Um, so anyways, I think those are all good signs. There's a few big announcements. Number one, we have Lakewood on the market. We're still trying to sell that. We'll keep you guys updated. We have offers coming in. We have a portion of F5 up for sale. We do not have any offers on that yet. It's actually still just going out to buyers right now. We are looking at selling the other portion of F5. We will get you guys numbers and updates on what we're asking, what that looks like the scenario wise as far as return of capital. We just sold a portion of F3. That was about break even. So we will get you guys numbers once we've actually closed. We're closing today. So we will not have numbers on any of those items for a little while. But once we do, we'll send you the breakdown and scenario, how that all plays out. But again, we're working as hard as we can to get these numbers as high as we can. And just trying to have the best possible outcomes. And so the good news about the sale in Fairmount 3, it was one of the buildings we sold for a very high price per door. And so we're really excited to kind of set those comps a little bit higher than where they've been. And so that's really good news. The market's still really down across the country, but just pushing really hard. We're doing everything we can. Michael, I know you're in this stuff every single day, following up, as is Lyndon and I and Jens with our property managers and brokers and attorneys. So working really hard there. The other announcement is we did ask Jason and Nadia to take a look at all of the evidence we found of poor workmanship or stuff that we paid for that was done appropriately that needs to be warranted or redone. And we have asked them to go ahead and do that. We don't have high hopes that they will do that, but we are pushing really hard on that front as well. We've shared with you guys a ton. Michael and Lyndon and I went out in September and we found, a lot of the reasons for not being able to rent units and other items. It was because of really poor workmanship or workmanship that wasn't done or wasn't done correctly. So we have made those requests and detailed those items out for Jason and Nadia, and we'll be waiting for the response. But again, pushing hard from every angle. Michael, any other thoughts or comments about Cleveland and what we're working on there?
A couple things. On the Jason Nadia issue, we should be next week or two having probably a Zoom call or a phone call of some kind between Jason, Nadia, and us to get clarity on how we can resolve this issue. We do not want to litigate. That would not be a good idea. If anybody has any questions why, they can certainly call or text, but that would not be a wise thing to do. We think we can do it without litigating, and that's what we're pursuing right now. The second thing,
I don't
Sam,
want
can
to
you
litigate,
just
Michael, because that would jeopardize the loans. I mean, that I think our investors really need to understand that the lenders could call the loans due. So we're
yeah,
avoiding litigation because that would make a bad scenario much, much worse.
yes, thank
So
you.
that's why we're trying to avoid that.
Can you clarify on F3? Because I don't know how much per door that's sold for.
Yeah, I'd have to double check because we did give them a concession for some repairs, but I want to say it was 114,000 a door, which is really high. It's because it's a small building. It's like 8 units as opposed to 80 or 100 units. So obviously you're going to sell for a lot higher price per door, but that still helps. It still tells a really good story. Um,
That's why I wanted to bring it up
yeah,
because
yeah.
in F5, everybody, we are not selling F5 as one big portfolio of 104 units plus commercial. We have the Coventry Lofts, which is six different nice units, plus retail and restaurant down below. That is a separate unit we're selling right now as we speak. Been on the market for a week. Next week, as Sam was saying, we should be doing tours and starting that, hopefully having offers in the next couple of weeks. And then Sam and his team have worked very, very hard with the rest of Athene and our CPA to break down all the different other parts of the portfolio that could be, I don't know, Sam, what are they? Another 5, 10, 15 different separate smaller buildings.
Yeah, I believe it's I'd have to double check, 5 to 6 other buildings.
Yeah. And
Um,
because of this exact reason, we believe that the aggregate is less than if we break it up.
there's
Just one.
more buyers for
Yeah,
smaller properties. So you
right.
get a higher price because the buyer pool is larger, and exactly what you're saying, you can hopefully get a higher price per door.
Yeah. So that sets its own, hopefully its own comp right in the immediate neighborhood. So the timing is pretty good. That's all I got.
Yeah, we'll keep at it. As far as the rest of the properties go, Texas, we're doing pretty darn good. A lot of you guys are in Texas, so Dallas will start cash flowing again soon. I know we've had a lot of questions about that. A lot of repairs and foundations that we had to repair this last year.
Well, actually, can we talk about that?
For sure.
In the Dallas deal, you know that we had one tenant that was holding up an entire building from getting repaired.
Yeah.
That really messed us up. So not only did we have to wait 3 or 4 months to get that tenant out, but then we had to repair the building, which is what we're doing now. We found another building, unfortunately, that also needed repairs, which took down a few more units. So it was just kind of a cluster of a lot of things that has caused some pain in Dallas. But
But the good news is we're beating the market as far as occupancy goes. That's really comforting. I mean, the market's really struggling in Dallas and it has been for the last couple of years. 89, 90% average occupancy. And so far we're doing a little bit better than that. Despite the having down units and so that's comforting. So again, cash flow in the next few months as we finish paying off these repairs.
Yeah.
El Paso is doing fantastic. Record month for collections at Desert Peaks, 181,000. That's huge. Terrace Hill, struggling to get to 95%, but still over 90%, which is great. That market's doing okay, softening a little. And then we're pushing hard on K1s for San Antonio. Unfortunately, that partners that is in charge of those not moving quick, but we'll keep you guys updated. So reach out to Michael and I with any questions. We're here. You guys have our cell phone numbers. So Michael, appreciate it. And I think that's it.
Thanks.